What's up, guys? It's April 22nd, 2025. I want to give a quick shout out to all the new subscribers and members. I appreciate you guys following me. I trade price action, I trade breakouts and pullbacks. And yeah, let's get into it. Gonna be dropping a new members video this week. And yeah, one of the members that we're gonna talk about the market cycle resets, and they had some questions about price action today with the bars, I think bar 50-ish. So we'll talk about that. We'll talk about the market cycle and do the daily breakdown. Find today's trades. I was profitable today. Took a L right here on this trade, but I took another trade here and I was good to go. So, man, the daily chart's looking kind of ugly. We have a breakout resets the market cycle. So like one, pull back like two, pull back like three. That was ugly. Like one, pull back like two, pull back like three, pull back like four. Higher low for the bulls. That's bullish price action. Bear shy, make a new low, sells off, rally gets trapped. Now big down, big up. We have a micro channel against a micro channel. That tells us we are in a trading range, and that's what we're getting here. Lots of overlap. We had a couple of legs lower, like one, pullback like two. On the 21st, we made a new low, and now we rallied into the EMA. We got a big gap up. This is the overnight session. Daily chart. So, talked about yesterday how we broke out of this trading range. And we had three legs lower, like one, pullback like two, pullback like three. Sideways price action. I said bulls want to get back up here. And now we have a big trading range here and here. But in terms of today's price action right here, we have a breakout, leg one, pullback, leg two, ends up being a second leg trap, testing this, sells off, puts it to a trading range, and the market starts to contract. Pretty cool day. So we gap up. Bar one is a bear bar. We're breaking up. We're breaking above the higher time frame EMA. Bar one, bear bar. Bar two, bull bar closing above bar one's high. That is good for the bulls, bad for the bears. Bears obviously want to see a reversal. Bulls want this to be gap up, first reversal, and a rally, and that's what they got. Bar three, another bull bar closing on its high. Then we see bar four. It's a bull bar closing on its midpoint. Now bulls have a gap here. That's good for the bulls. That shows. Oh wait, where is it? That's good for the bulls. It shows us that they're now trapped bears. The bears that shorted the bar one high is trapped. They do get out with bar five. It goes to 50% level. So when bears buy back shorts, bulls are going to buy the first pullback, and it's a shallow pullback. Bar five is actually it's a better buy than a sell. Then we have another 3-bar micro channel, 6, 7, and 8. Bull bars closing on their high. There's no gap, so it's okay. There's just no gap, but there's 3 bull bars in a row. Bar 9 rallies, sells off, doesn't make a new low, ends up becoming a pullback with bar 10, sells off and rallies. So now we have a pullback. We're in a third leg. Bar 10, bull bar closing, bar 11, bull bar closing on its high. Bar 12 is a pullback and it breaks a trend line. This is the third leg. There's a question in the Discord today asking about, is bar 13 a good buy? And it's a tough one because we are in the third leg, but we have a lot of bullish momentum. The trader did buy this and was profitable, so good job. Shout out to you. 14 sells off and then rallies. Now we have a wedge top that gets a bullish breakout for another 3 legs. The market's starting to become climactic. It is hard to buy up here. 15, small tail, closing on its high again, and then 16 rallies, sells off, closing right around 15's close. Bar 17 sells off and then rallies up. So now we have a trend line break. We have multiple legs up. We have leg one, pull back, leg two, pull back, leg three, pull back, leg four. Bullish breakout, resets the count. Leg one, pull back, leg two, pull back, leg three. High one in a trading range, high one in a leg three. Bar 25, generally a good fade. 18, bull bar closing on its high with a tail. I would be cautious if you're long. We have been trending for a long time. We're definitely past leg three, but there is a market cycle reset when we break out right here. The first leg, first trend line break 17, so this is the second leg. 19, it's a bull bar, not closing bar past 18's high, so be cautious that, if you want a trending market, we want to see bars like this all the way through. Now 19's closing on its midpoint, and then 20 makes a new high, but it's a very small bar. Closes just above 19's tail. 21 bull bar closing on its high, but the bars are shrinking. Each bar is consecutively getting smaller. 21 or 22, first reversal, but it's starting to be a third leg, and you could even count it. Leg one, pull back, leg two, pullback, leg 3, pullback, leg 4, or the first count, leg 1, pullback, leg 2, pullback, leg 3, wedge top, bullish breakout, leg 1, pullback, leg 2, pullback, leg 3. So although 22 is the first reversal after 1, 2, 3, 4, 5, 6, 7, 8, 9 bull bars, be cautious if you're going to buy that. You'd have to scalp out. You could make about a point, but I don't think it's worth it. I think the waiting for a pullback is better. 24, first bear bar closing on slow. 29, sells off, so bears are getting filled, and then it rallies, shopping bears. This ends up being a pullback for bar 24. I like to trade 3 bar bull micro channels. That was the first system I traded, and any bar closing on its high is 3 bars on the 100-second chart. So 24 is 3 bear bars on the 100-second chart. That makes bar 25 the first pullback for the bears that short here, and they short that for 2 more legs lower. Leg 1, pullback, leg 2, pullback, leg 3. I had a limit order sitting right here. I got filled on 27, and I got out on bar 30. This was a big bar. 27, testing the previous breakout point of the second leg here. 28, small bars, inside bar. If you're short, I think it's okay to get out. If you're long, I was long during 28, but I got filled here. If you're long and you're holding through here, you're risking the market reversing, but in this situation it ended up breaking out. 29, bull bar closing on its high, creating another gap. There are some more gaps here. I didn't talk about that, but I should draw on all the gaps. When we have 2 gaps at opening, that's trending behavior. So lots of gaps, lots of bears getting trapped. Again, 29, 30 creates a new gap. Now, I was talking in Discord to some of the guys that were asking about gaps. 29, 30, 31. It's the biggest gap late, and it's in the third leg. So if this was an overall, you could say leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. We're in the 4th leg, and we're having really big gaps. So the question I proposed to everyone was, is this the start to a new trend, or is this an exhaustion gap? And it was an exhaustion gap. We see that it's still got its own 3 legs. Leg 1, pullback, leg 2, pullback, leg 3. But you have to be quick. You have to be very quick if you're going to buy up here, because you're buying high. You're buying late in the trend. You're buying after climactic price action. These are the nicest looking bars after the trend has already taken place. Usually these type of bars are in the beginning of a trend, so these look nice. And if you see them at the end, they could be exhaustion. So leg 1, that was ugly. Leg 1, pullback, leg 2, and then 34 is an opposite bar, but then that was a good fade. First reversal of 35. You could buy that bar and create 1R quickly. Get 1R. 36, 37, 38, 3 bar bear micro channel. Now that's not good because bears are getting 3 bars. So if this didn't tell you we're in a trading range, we are definitely in a trading range now. 39, sells off, rallies, becoming a first reversal. You can short the high here. It's a hard short. Bar 40, bear bar sells off, closing on its midpoint. So bears are not that strong. And then we see a big tail 42. So there's a wedge bottom. Leg 1, pullback, leg 2, pullback, leg 3. 42 is testing the 32 low. And there's a small rally here. 42 is not an inside bar because it goes 1 tick above 41's high. But then we see 2 bull bars, 43 and 44. Bad closes. Could just be a pullback to something bigger happening. We see 45. I had a limit order set here, hoping for a retest of here. Ended up getting stopped out very quickly. It is what it is. 45, big bear bar closing on its low. 46, good follow through. 47, so this is a leg. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. I actually had a limit order set right here on the 45 body, and I didn't get filled. Kind of bummed out because I usually do the tails, but I thought the risk was too big, and I saw 48 rally and sell off. I was like, wow, that would have been 1R very quickly. So that sucked, but you live and you learn. I would have made what, 20 points in 1 bar? Yeah, 25. It is what it is. Missed out. I made it back just right around here. So we have 3 legs down. We have 3, 4 legs down. Big breakout. Bears are getting a gap now. So now we know bulls are trapped. I was one of those bulls. The limit order bulls that are buying this high are now trapped right here. You don't really get a chance to get a break even unless you're willing to hold all the way down here. And I personally was not. I'm sure there are some strong traders that could have done that. There's 3 types of leg counts going on. There's a leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. And then in terms of trendline breaks, there's a leg 1, pullback, leg 2, trendline break 48, pullback, leg 3, pullback, leg 4. And then this entire thing shown to get its own second leg, and it does right down here. So leg 1, pullback, leg 2, pullback, leg 3. So a lot of ways to count this. 54 is also testing the high of the previous breakout point, so I think that's a good buy. I think it's a hard buy if you have a limit order set there, but it ended up being a good rally. 50, where are we? 55. 55 creates a limit order. Bears that are selling right here get trapped, and then the market rallies for another 3 bars. That's a 3-bar bull microchannel. Good for a second leg. Context is good. We're above the EMA. Best the bears can do is a trading range, anyways. 56 shallow, or excuse me, yeah, 58 shallow. It's a first reversal, shallow pullback. Breaks out 60. Breaks out 59, 60. Good follow through. And then 61 follow through for 62. That's a 3-bar bear microchannel. This could become the third leg. Leg 1, pullback, leg 2, pullback, leg 3. 62, it's a shallow pullback, and we get another 3 bull bars. These 3 bull bars have tails, so be cautious of that if you're holding long. I was short here, and then I had a small position, and then I added more on 66, and I got out for a winner here. I had a limit order set right here. The limit order that didn't get filled, I just held it to right around here, and then I made my money back there. Then I got filled 57 on 72, and I got out right around 75, turning up because I was trading past 72, so I didn't really like that. Bar. So now we have the bear bars. Bar 67, closing on slow. 68, closing on slow. 69, closing on slow. Good bear bars, but we are above the EMA, so it could become a hard hold. Bears are getting gaps, so that's good. We know bulls are getting trapped when a gap shows trapped traders, and the gaps are needed for strong breakouts and reversals. So in trending behavior, gaps stay open. In training range behavior, gaps get closed. Look, we were trending here. These gaps stayed open. We went range bound. Remember I said this is exhaustion. These gaps got closed. Then look, this gap got closed here and it sold off. Then these gaps, then this rally closed these gaps. Then this rally got closed here. This gap stayed open. This gap got closed. Then we have another gap here. So gaps are closing. So that's trading range behavior. Let's talk about the market cycle. So where are we on the overall market cycle? We have a breakout and follow through. That's resetting the market cycle. Now we have a breakout here. So leg 1, pullback, opposite bar starts the channel phase, and then we're looking for a trading range. Leg 1, pullback, leg 2. We are channeling higher. We're looking for that third leg. Okay, we're coming into a third leg right around here, and to get this trading range behavior with a remember the thing about if you shoot a bullet into a box, the momentum will generally come out the same way. Well, here, imagine this bullet being shot into this box here. So it has some bullish pressure, and it breaks out to the upside. You could reset the leg count, leg 1, pullback, leg 2, pullback, leg 3. It's hard. If you want to count this overall as one leg, that's fair. Leg 1, pullback, leg 2, deep, pullback, leg 3. You could count it leg 1, pullback, leg 2, pullback, leg 3. What I'm trying to get at is we're in a trading range, and then we see a bear microchannel here. So that tells you we have a bull microchannel against a bear microchannel. Trading range behavior. Here's a trading range. It does get a breakout with its own 3 legs, but overall, I do believe this was more an exhaustion rally, and it was. It ended up reversing past the breakout point, so that's not good. This breakout point stayed open, but this breakout point closed. So the trading range actually started right around here, because that's where bears wanted to get to. So leg 1, pullback, leg 1, pullback, leg 2, pullback, leg 3. And now we have a trading range right here. Breaks out. These are all fractal market resets, by the way. We're still in an overall trading range. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Trading range behavior here. Breaks out again. Leg 1, pullback, leg 2, pullback, leg 3. Then we get that breakout trading range behavior. Bear's target is around 58 high. And then we rally trading range behavior. Overall, so I just went through the fractal trading range or market cycle with the wedge top breakout, reset, breakout here, resets, breakout here, resets. But overall, leg 1, pullback, leg 2, pullback, leg 3 is trading range behavior. You short the high here, your first target is going to be the first pullback or the pullback. So here's a pullback, here's a pullback, here's a pullback. That's met by the bears. So now we're in an overall trading range like 1, pullback for 2, pullback for 3, trading range behavior, and now we're rallying again because this was the trading range lows. The bulls kept a small gap open above the EMA. Let's go over the measured moves, and then I'm going to answer this question I got asked in the Discord. And if you guys have any questions about today's breakdown, ask them in the comments or the Discord. If you guys have a question about tomorrow's price action, ask me in the Discord. I'll answer it in the daily breakdown. So leg 1, put it to the bottom of the pullback. That's met there. Another 3 bars, strong to get its own second leg. Momentum is good. Eventually, over time, you guys keep looking at the same thing over and over again. You're going to learn how to measure momentum, kind of like an eyeball. There's no, I'm sure there's an indicator out there that could help us, but I don't know about that. I don't trade with indicators. So here's 3 legs, and I put them all at the bottom of a pullback. This was a trading range, so the trading range was down here to up here, breaks out. Here's another leg, put it at the bottom of the pullback, and 1-to-1's met there. Trading range behavior from the high of 23 to the low of 28. 1-to-1 is met, and the market starts to go sideways and reverses. 3 bear bars here, put it at the high of the pullback because we're measuring a leg. Bang, that's met pretty quickly. 1-to-1 with bar 41. Now this is an interesting bar because it got 1-to-1 very quickly. So when I was measuring it, I was doing this, and that's why I had my limit order set here. And then 1-to-1 really wasn't met until 48 already taken place. So it's a tricky trade. Anyways, 45 got 1-to-1, so you sell it. That's a hard sell too. It's kind of climactic. It was moving very fast. Another trading range right here. Breaks out, gets it to 1-to-1. I'm going to put this a little bit to the side because we have another 3 bull bars right here. Put it at the bottom of the pullback. And just because I put it at the bottom of the pullback, it's very hard to enter right where the pullback starts. That's where the measured move starts. So maybe some of us would enter here. Some of us might enter here, but then that would be the target. You guys see 3 bull bars here. Bottom of the pullback, bang, met. Trading range behavior, we're at trading range highs. We're testing the low of 44. Sells off, you could target this. Let me get the question up. I'm going to clean the chart up a little bit here. I'll leave the gaps open. Okay, the question. My name is Ding Dong in the Discord, by the way. So Ding Dong, could you please go over today's price action when we have bar 55? So 55 through 58, 55, 56, 57, 58. Do we put a limit order long or do we put a limit order short based on the downtrend before? It's a little confusing for me in a trading range. Okay, so yeah, that's a tough question because we have a good leg right here and we have a good rally right here. So the question is, do we put a limit order long or a limit order short? I'm going to draw some lines so we can visually see. I had a limit order short here, full transparency. My stop was above this bar. I had a small position because the risk was big, and I added to it here, and I just got out right below my entry. I don't really think people should be averaging in until you understand market context. I already knew we were in trading range because of this rally. The bulls made a new high, then I get stopped out for a little bit more, but I had a small position anyways. So that's from the bear perspective. You could try that. I did that. I also checked. I didn't take this trade, but I was checking it out. A short here, you would get filled. I'm gonna delete this box. A short below 40, what is that, 44? You would get filled here, and that would also work. You're selling trading range highs, you make your 1-to-1 pretty quick. And from the long perspective, it also worked. 3 bars here. It's a tough one. I took this trade. I just scalped out. I was on my phone. I put my order here. I got filled on 73, and I just scalped out on 75 because it was the end of the day. I didn't really want to trade that much. And 1-to-1 was met there. So we're in a trading range. Both trades worked. Here you had to do a little bit of wiggling. If you averaged in, it worked. Even if you didn't average in. So if you got filled here, looking for a 1-to-1 again. That's what I was looking for. I thought the market would rally here and sell off. You would sit through this. Your stop wouldn't get hit. But if you're also getting a bullish breakout, you could just hit out. That's acceptable too. Wait for the next trade, which would be above 57. Or you hold, and then look, you have time to get out for a small profit. So could you please go over today's price action when you have bar 58 to 55 to 58? Do we put a limit order long, or do we put a limit order short based on the downtrend before? It's a tough question because we're in a trading range, and all three trades worked. This trade worked, this trade worked, and that trade worked. I would have liked to have taken that trade and avoided that trade, but can't always have what we want. So to answer your question, it worked. I'm not fond of this trade just because it's past bar 72, but not to sound like a parrot here, but it did work. See. So yeah, that's how I would answer that. All three trades were acceptable. If you're going to trade big, I wouldn't average in. I would hit out on when the bulls are getting a breakout. If you wait here, that's great. You're going to get a pretty quick fill on 65 and sell off. If you wait here, you're going to get a quick fill. You'd get filled on 73. And I wasn't filled on 73 because I was already short, and then I was watching how the market reacted. I got filled on 72, 73. Excuse me, I was saying 73, 71. So, let me rewind. I got the numbers wrong. Okay, so if you have an order here, you get filled on 71 and meanders, and then you hit. I didn't get filled on 71 because I was already short here and or here from here, and I added in, and my average price was just around the low of 68. There's another trade I just found talking about it. You would get, this would just be a loss straight up. You would get filled on 75, out on 76, stopped out. So all three of these trades would work for if you have a limit. If you have a limit order short below 45, you would have to scalp out, or you take a loss on 79. You have a limit order here, that would be profitable. If you have a limit order long on 57, that would be profitable. If you have a limit order short below 68, that would be a stop out, which happens. If you have a good system, just the system, follow the rules, and you'll be good to go. So I hope that helps. Again, thank you to all the members. I appreciate you guys. Thank you for tuning in. Thank you to all the subscribers. Please ask me questions. Join the Discord. The link is in the comments. I'll talk to you guys tomorrow. Have a good day, everyone. Thank you for your time. Bye. If you learned something, share the show. Don't be a hoe.